Now, central banks in Africa have been urged to relook the regulation of financial technology in order to increase uptake in fintech in the continent. Experts speaking at the Investment in Africa conference in London, England, say overregulation is hindering uptake, especially among those who have been locked out by the traditional financial systems. Betty Kiptum reports.
A World Bank report shows that poverty is falling more slowly in Africa than other regions. With climate vulnerability and high debts coupled with depreciating currency, the achievement of the Sustainable Development Goals in the continent continues to remain a dream. Financial technology has now been fronted as the solution to achievement of the SDGs. In the recent years, there has been a ballooning of activity in the fintech scene, where financial companies and startups use artificial intelligence and other tech in their day-to-day activities. Despite the tremendous growth, players say uptake of financial technology in the continent is hindered by overregulation.
We're going much quicker in some of the things that we're doing, and it sometimes takes the regulators a little bit longer to catch up. So, and particularly around KYC. So, we just think it's unfair for people to be excluded from financial services because they don't have the documents that we've kind of traditionally expected people to have.
The regulator has a job, and that's to protect the consumer. And if you've seen in crypto and in blockchain all the scams that's come about, because there's not enough regulation, I'm not saying overregulation, I'm saying not enough regulation, the regulators play a very important role. And I would like to see a lot more of that within the Sustainable Development Goals, the SDGs.
They say the legal framework governing fintech needs to be relooked to ensure that it does not lock out those who have been locked out by traditional financial solutions.
And we say the regulators should take a different approach and maybe have a more tiered structure. If people are transacting $5 a day, they're not financing international terrorism, and we should create our regulations appropriately.
But when you look at it, just starting with poverty alleviation all the way through to partnerships, I think there's a very significant role that fintech in its broadest sense can play in providing an equal platform or, advancing most of the SDGs.
They said that there is need for more innovation that covers the needs of specific groups, such as women who have for long been locked out of the financial systems.
Technology and financial inclusion is the lifeblood of achieving SDGs. We're not going to be able to achieve them without doing much more by way of financial inclusion. And I think that's worse for women generally. They're not as likely to be involved in formal finance.
The global fintech market is anticipated to grow at a compounded annual growth rate of 20% to reach a market value of $305 billion by 2025. Betty Kiptum, Prime Edition.